Hello and welcome to Market Insights. I am Lavina Emma. Yes, today has been a wonderful day. It's decision time, and the decision was made yesterday. Still on the Monetary Policy Committee, the decision was made yesterday, Tuesday, 27th February, and the Central Bank of Nigeria Governor, Mr. Yemi Cardoso, communicated the decisions at a press conference yesterday afternoon. All 12 members of the committee attended the meeting. Now, 4 important decisions were made, and these are: the first is the increase of the MPR to 400 basis points from 18.75% to 22.75%. 2, adjusting the asymmetric corridor from around 100 or minus 700 to 3 plus 100 or minus 300 basis points, raising the cash reserve ratio from 32.5% to 45.0%, and the last one, retain the liquidity ratio at 30%. Now, all these decisions were taken by the Monetary Policy Committee yesterday, and these decisions, how they will affect the common man on the street, how do it affect the inflation situation in the economy, will be discussed by my guest and I. So welcome to the show, Mr. Oladetan Oladetan.
Good morning, Lavina.
Okay, we're happy to have you on the show this morning. So we'll be discussing the decisions that were taken by the Monetary Policy Committee yesterday afternoon and the reports that was shared during the press conference by the Central Bank of Nigeria Governor, Mr. Yemi Cardoso, and how these decisions will affect the economy, especially our inflation situation. So, moving on to that. Now, these decisions, actually, the first off, let's talk about how the interest rate was increased from 18.75% to 22.75%. Now, I know that this decision was made to curb inflation in the economy. So do you think the committee made the right decision concerning increasing the interest rate?
Okay, so as pertaining to the interest rate, we know that usually when there is a situation of high inflation, there's usually a spike in interest rates. And basically what interest rate helps to do is to reduce the money in circulation. So for example, if you look at the broad money in circulation, which is simply the M3, we saw that it increased by 76% between January 2023 and January 2024. That was an increase of about 53.14 trillion. And it also increased between December 2023 and January 2024 by 19%, which is about 14.98 trillion. Now, why did we have this increase? We could remember during the festive period of 2023 and early 2024, there was a change in the currency being used by Nigeria. And as regards some denomination note, which is about the 200, the 500, and the 1,000 note. So they were trying to call back the previous currency, and later on they brought back the old currencies and the new currencies to flow together. So there was a lot of money in circulation. Now, what really happens is that supports the notion that you have so much money chasing fewer goods. So if you have so much money chasing fewer goods, that is more like a demand pull inflation. That is, I have a lot of money and I don't have I'm ready to spend this lot of money at that point in time. So basically, it is expected that if the interest rate increase, that will help steepen it. But let's take a very good look at the Nigerian inflation system. Over the years, the Nigerian inflation is not just a demand pull, but it's also a cost push. So that is very, very important in the sense that aside trying to address the side of the demand pull, we also need to address the side of the cost push. So when we have that the interest rate went up from 18.75 to 22.75 by about 400 basis points, which is about 4%, what is expected is that it is more expensive for people to borrow. So immediately yesterday, several banks would have sent out communication as regards the adjustment to the interest rate. So basically, the MPR is one of the bases that is used to adjust the interest rate offered to both retail and commercial loans. So we also have the things like the prime lending rate, in which you are going to be lending to AA companies. But if we look at the asymmetric corridor, we are having that despite the interest rate going to 22.75, the lower asymmetric corridor is minus 700 is bringing it to about 15.75. That shows that the CBN does not really want to incur a high cost of borrowing. So if we look at it, CBN can borrow from banks at 15.75, but if they want to lend to bank, they are going to be lending to bank at 23.75. That's more or less squeezing the banks or squeezing the financial institution. Aside that, from making them to earn less, you also increase the liquidity, maintain the liquidity ratio at 30%. That is, for every 100 naira that I deposit in the bank, I have to keep 30 naira, such that in the event of a bank run, or in the event of I'm able to settle the obligations of people at all time. Because first, what is the business of banking? Banking is the business of intermediation. That is, we take from the surplus side of the society, those that have so much money, and we lend to the deficit side of the society, those that do not have much money. So that is what they will say. But we observe that most times is the rich people that usually take up this debt from the bank. So if you've adjusted the amount, and also what was shocking to most of us was the fact that the cash reserve ratio moved from about 32.5% to about 45%. So aside from the fact that you have to keep about 30% or 30 naira out of the 100 naira that you have within your vault, so that's to satisfy obligations or people that make their demand for their money, you also have to deposit about 45 naira with the CBN, which is a cash.
Okay. Yes, thank you for that, Mr. Oluwatosin Oladetan. Yes, I understand what you are saying. But before we actually proceed, there's something I want to note out. You mentioned that, yes, they have actually increased the interest rate from 18.75% to 22.75%. Yes, it's something a lot of economists and analysts were speculating, and true to their word, yes, the committee made that decision. And you also mentioned that it doesn't really benefit people who want to borrow money from the banks, because they'll have the interest rates will actually be higher for them. Concerning that short video clip, like I want to discuss with my guest, Mr. Oluwatosin Oladetan, we all heard the Central Bank of Nigeria governor when he mentioned the increase in the interest rates and how this would also affect, my guest also said how this would affect people who want to borrow from the banks. But the Central Bank of Nigeria, when they want to borrow, this interest rate doesn't affect them. So yes, yeah, you also mentioned just before we went to watch that short video clip that this means that people who would like to borrow from the banks, maybe for their businesses, would not be able to afford this high interest rates. But you said rich people can afford it. So I want to know, like, people who want to start their own businesses, or maybe the average person who just has his business idea, requires capital for his business. So how would he walk around this new adjustment, this new directive from the Central Bank of Nigeria? Yes, Mr. Oladetan.
Okay, so basically, business can be funded by either debt or equity. So, for example, for businesses that just want to start off, it's not really advisable for you to use debt financing. So, what the intention is for the rate to be able to drive in more equity investment. So if you look at the stock market over the last 1 year, it appreciated, and some of those appreciations were not really due to the fundamentals of the companies themselves. It's just as a result of the external environment that we couldn't really explain. So basically, we are going to be seeing more of equity investment. We've also seen that the foreign investors' participation in the equity market has already reduced. So basically, it's going to have companies to sit back and come back to see how they could raise more equity fund. You don't really need to do well with debt funds, if in the case the interest rate is going up. But most especially what we've seen in normal business financing is that as the debt rate is going up, you're also likely to have the cost of equity going up. So if the cost of equity is also going up as at that point in time, now what is the concern? It simply implies that the CBN is trying to reduce the money in circulation by squeezing out, making businesses to squeeze out and not to be able to spend a lot, so as to be able to reduce what we to tamper inflation. If you look at the medium-term expenditure framework that also drove the budget for 2024 to 2026, we are going to be having that inflation rate for 2024 is pegged at about 21.4%. If you look at the Nigerian inflation rate now, is about 29.9%, moving from 28.92 as at December 2023. So if you want to achieve that lower inflation, one of the things that we usually economics usually applies an increase in interest rate. So for example, if you look at the US, for example, when inflation went from 2% to a double-digit inflation, Fed increased their rate, and we were able to see that. Also, when we look at the case of Ghana too, you saw that there was also an increase in inflation going to as high as 50-something%. We saw that the increased rate, and it was able to taper it to around 30% within that corridor. Now, let's look at for businesses. One, is more expensive for businesses to borrow. Businesses can either focus on either increasing their price. If people do not have more money, you have to either focus on cost efficiency or find a way to be able to reduce your pass to maintain the same volume. But let's also look at the money market indicators that is really also driving the economy. We've seen that the interest on government yields, FGN bonds, government bonds, and the treasury bills has increased from about 10% last year to around 18.75, about 19% within that same range. Despite the fact that it is undersubscribed, more people did not really subscribe to the bonds, but we've seen that we are trying to increase the marginal propensity for the average Nigerian to save. Now, that is likely to affect the foreign exchange in the sense that we've seen that over the last few weeks, the CBN has been trying as much as possible to intervene within the foreign exchange market by bringing out several policies, several regulations, and all that. So, but first, let's look at an average person that holds the dollar in Nigeria. We could either hold the foreign exchange for either transactional purposes, speculative purposes, or investment purposes. So investment simply means that I want to invest and earn returns at the end of 1 year or at the end of a certain particular point in time. So if you look at previously at 2023, let's go back to when the dollar was about 300. When the dollar was about 350 to around 400, you could have you've bought foreign currencies at that point in time, and the Nigerian naira depreciated against the dollar up to like about 1,900 last week. You would have earned several returns, close to like about 500. You would have earned 500 returns. So an average person that was holding the in the last few weeks, an average person that was buying the dollar was simply buying it for speculative reasons. Speculative in the sense that since there is a depreciation of the naira or the devaluing of the naira, I can hold the dollar so as to earn a greater returns on investment. So for example, let's say you are investing the dollar in the US market, and let's say you are earning a return of 6% per year, and in Nigeria you are earning a return of like about 10%. If you now convert it in 1 year time, let's say I invested 1,000 naira, and you convert it in 1 year's time, you see that you'll be having a greater returns on the dollar than on the naira. But considering the fact that the rate has already gone up now, more people are likely to save in their naira. So we are trying to make more demand for the naira. Now, that is likely to reduce inflation if it is what demand pull. Now, the other side of inflation is cost push. Now, what is a cost push inflation? That it is more expensive to buy for the suppliers to buy their goods and services for them to be able to sell to the average consumers or their major customers. Now, why has that gone up? Why has that gone up? Simply because the foreign exchange has been further depreciated. Now, if the foreign exchange has been further depreciated and majority of those things, Nigeria is not majorly producing economy, simply in the sense that an average Nigeria will rather export raw materials and import more finished goods. We don't have the right support for the manufacturing companies for them to be able to produce in-house. So if you are importing, it is more expensive, and the weaker the naira is going to be. So that's why if you also look at the case of food inflation, which is driving majority, about 15%, 12 to 15% of the total movement in inflation, we're seeing that that is food inflation increased as a result of insecurity issues, inability to access the farms, lack of increase in the cost of fuel and diesel to move these goods from the farms to the final places where they will be consumed. And also we've seen that cost of logistics and storage was increasing. So the only way the supplier can still make the same margin is for them to transfer the cost or this increase in cost to the final consumer, and that's what is cost push inflation. So, but to address the case of the cost push inflation, the CBN alone cannot do that. Yes, despite the objective of the CBN to maintain price and monetary stability, the cost push inflation, we also need introduction of fiscal policies, appropriate fiscal policies. If you look at what I can say about the fiscal policy, that's more or less like intervention within the government for them to be able to see how the government can reduce their spendings. Yeah, we saw that at the last Federal Executive Council meeting, the council agreed on the implementation of the RSI's report, which is more or less reducing the number of ministries and agencies that are carrying out similar functions and see how we can integrate them. So that is a very good approach. Also, we need to see how the fiscal policies should try as much as possible be structured to reduce government spending. Nigerians' government is too expensive to run, and if we are despite you have strong monetary policies, if we don't have suitable fiscal policies to complement those monetary policies, it's going to seem like we are not getting the best out of it. So it's usually advised that the fiscal intervention, the fiscal policy also play their own role, which was also mentioned by the CBN governor yesterday, Oladetan O, during the press briefing.
But there are some certain factors. Yes, you mentioned that, yes, he did say that they're going to improve on the fiscal policies. He also said the reason for this was to curb inflation in the economy. But these factors are not really, like I would say, they're not really impacting on the common man we see on the streets, actually. It's not really having any effect on them. And then, yes, you mentioned the how we can actually curb the cost of governance. Yes, the president is going to implement all the things that were discussed in that Orosanye report. He also said he's going to reduce the cost of governance by merging a lot of ministries together. Yes, we hope that these things will help, but in the long term, we want to actually see a more permanent solution to be effected. So the rising cost of energy is one factor that has really affected people's businesses, and the insecurity challenges in terms of food productions and other infrastructural deficits. For example, we complain of bad roads all over the country, and in terms of people who want to, like traders who want to transport their goods from one place to another, have complained of bad roads, have complained of insecurity. Farmers who produce in large quantities complain of insecurity on their farmland. So we know that these physical challenges have not yet been really addressed, really been solved, and saying that at the end of the day, everything will come down to the consumer the consumer is going to be the one to bear the brunt of all these challenges. It doesn't really help in any way. It doesn't really show that this is really impacting on the common man on the streets, actually. So, yes, and you also mentioned the foreign exchange rates. I know that during the Monetary Policy Committee, the decisions that were taken by the CBN governor, they also talked about how the policy rate hikes will have to be slowed down. That's the only way they can actually curb the rise in inflation to a desirable extent. But do you really think that this would actually be more effective? Like, in your own opinion, please, what would your thoughts be on this?
Okay, so when it comes to physical policies are long-term measures. For example, if I want to build a road, I cannot build a road within 1 month. I cannot build a road within 2 months or 3 months. If I want to fix issues relating to power supply, that might take me some years for me to be able to fix it. The only short-term thing the physical policies could do is more or less probably reducing tax rates, or to if you even look at the ease of doing business in Nigeria, it has been on the negative for over a long period of time. We've seen that the president is traveling around for investment rounds. Also, the CBN governor is even planning to hold an investment round, an investment session over the next few days. So that is going to take a longer term. before we see the impact. So, but increasing the interest rate is more or less like a short-term fix. We've observed that the interest rate was not, the MPC didn't hold since July last year, and we want to see the impact of this increase in the interest rate within the next 1 month, because the next MPC is likely to hold in March. But to reduce the inflation or to try and taper inflation within the short term, the only thing that the CBN can do is for them to be able to reduce the money in circulation. And how can you reduce the money in circulation? Is either by offering higher returns on short-term and long-term government instruments like the T-bills and the treasury bills and the FGN bonds, or try as much as possible to increase interest rates so that people do not have much access to funding. So for example, let's say at the end of the month, on a Friday, I usually have like about 50,000 naira within my wallet. So I can easily go and spend, oh wow. But if at the point in time I look at myself, and on that same Friday, I just have 5,000 naira. Naturally, I'll find a way to live within that particular means. I will not have procured as more things I will have procured when I have that 50,000 naira. Now, considering that people are likely to have higher returns on the naira now, the marginal propensity to save is going to come in. So, like I said, Nigerian, what really led to the devaluation of the naira was simply because there was no clarity as regards the leadership, as regards the direction to drive the exchange rate from the CBN after the introduction of the buyer winning seller basis. Also, there were a lot of speculators. We saw that like about $26 million passed through Binance over the last 1 year, and there were a lot of people that were not playing effectively. So we have the speculators really made that depreciation to occur within that particular period. So the only thing is, just like we have now that the CBN has already stepped in to be able to stabilize the exchange rate. We saw that they were awarding about $20,000 to bureau de change, recognized bureau de change, at 1,301, and they also give them a mandate that they should not increase their margin above 1%. So we're likely to see a stability over the next few months. If we also observe that there was an increase in the foreign reserve of Nigeria between January 2024 and February, the foreign reserve was at 32.23 billion, and presently in February, as at February 20th, the foreign reserve is about 34.51 billion. So you're trying as much as possible to strengthen the naira and allow it to appreciate more against the dollar. So that is the objective of this CBN. But for this to be effective over the long term, we need to see constructive fiscal policies that are coming in place so as to augment the monetary policies. Then we know that over the long term, if we have good fiscal policies being played alongside the monetary policies, we are going to be having a tapering of the interest rate, or a reduction within the interest rate as at that point in time.
The Monetary Policy Committee came up with measures to actually curb the speculators of foreign exchange. So certain reforms in the foreign exchange, such as the unification of the foreign exchange market, promoting a willing buyer and willing seller, removal of all margins for international money transfer operators, introduction of a two-way quote system, and broad reforms in the bureau de change sector. So we've all heard about it. It has been all over the media how bureau de change will have to get a license from the Central Bank of Nigeria, and some of them have come up with how they will also merge to actually form their own system of banking and get a license for them to operate in a very lawful and more official manner. So do you think these reforms will actually be able to manage the high rates of how the naira is going down against the dollar, for example?
Yeah, so basically, if you're looking at the foreign exchange, the major thing impacting the devaluation of the naira or the depreciation of the Nigerian foreign exchange is as a result of demand and supply. So Nigeria is majorly an importing nation, and we don't have enough supply to address the demand. So the Nigerian average society imports much more than it exports. So we call that a trade deficit. Now, if you are having a case whereby you're importing much more than you're exporting, you're likely to have a depreciation or a devaluation of your currency over the long term. Now, aside from that, we observed that the CBN was majorly intervening when the rate was still about 350 to 400 within that particular margin. But upon the introduction of the winning buyer, the winning seller, we observed that the CBN stopped intervening. That is, let everybody come and bid. And naturally, you want to sell something, you want to sell at a higher price because you want to make a margin, and you are under the pressure of buying that thing because you need to be able to carry out your sales for that month, or you need to be able to continue your business. So you'll be willing to take it at any price of the market. Now, the CBN coming into the system yesterday to sell at a particular rate intervention simply means that if the market is not able to address the demand, CBN is going to introduce the dollar. No, so where are these dollars going to be coming from the CBN? Basically, we saw that over the last 1 month, we saw that NNPC remittance, which is majorly remittance from crude oil being exported, are being domiciled within the CBN. We look at the Nigerian foreign reserve, and also all funds that were usually outside, they are being trapped by the CBN. The net position within the banks were being remitted also to the CBN. So CBN also has been clearing some backlog. So it's going to take a while to be able to clear all the backlog. So, and if you even go and visit, we see that there's a lot of backlog. So why is that backlog so much? Because people need to import, and Nigeria is majorly an importing nation. So for you to be able to fix this issue, to allow more supply to be greater than the demand, Nigeria needs to export much more than it imports. So if we look at the Nigerian trade balance, we see that about 80%, over 80%, over like about 10% is from export of natural gas, and just like about 4% is from export of agriculture, which was not the case in the 1950s and the 1960s. So Nigeria need to explore other sources of revenue export. So we call that majorly a resource constraint. A resource constraint simply means because you depend on a particular natural resources, you decide to avoid other resources that could have earned you more income. So Nigeria needs to expand its export base, invest more in export of agriculture. You need to provide the right supporting environment for agriculture. You need to also provide appropriate support for the manufacturing sectors within the country. So we saw that earlier this week, the president had meeting with the economic committee consisting of the largest manufacturers in Nigeria. It is much more expensive to manufacture in Nigeria than to import that same thing. So if you are going to be looking at, simply because what is the cost of diesel, the cost of operating expenses, cost of raw materials, if we need to import those raw materials or to take them, so that cannot be solved in the short term. The only thing that can stabilize the foreign exchange in the short term is for the CBN to intervene. Nigeria is not yet ripe or ready for a winning buyer, winning seller basis. So if the CBN is able to have much more supply, we believe it can come down. But what I'm very sure of is that we cannot get the foreign exchange at 750 within this year, based on what was approved in the budget at the Naira to dollar foreign exchange of 750, because CBN will need to intervene a lot and decline result in other facts, considering the fact that CBN wants to also invest or create the right environment for foreign investors to be able to come into the country. So playing within 1,200 and 1,300 with these policies are very, very good for the CBN for now. But the CBN also need to ensure that those that really need the money are making use of it. So what I would suggest to the CBN, that for you to even purchase, yes, they've said that the maximum dollar purchase, if you are not you are not using it for either education, funding or import, is just about $500. For you to even purchase that, you need to take down your NIN, you need to take down your details so that you're able to see where the money is going to. If you observe, Nigerian Naira depreciated more against the dollar after FAC was paid in December and in January. We could simply say that as soon as the state government received their share of their federal allocation of revenue, they just went to use it to buy dollars and keep in the stock away. So that is one of the issues. We need to ensure that the dollars that we have in Nigeria are majorly for investment purposes or for transaction purposes. So what the CBN is going to prioritize is trying as much as possible to provide enough funds for transactions so that people are able to transact. We cannot afford to close all the borders now. It is not a reasonable alternative because we will not have the right infrastructure to make production in-house less expensive than what we import. So we have to import, create an opportunity for people to import, reduce the tariff, reduce the custom duties and all that. But in the long term, we need to develop the right infrastructure that makes it cheaper for an average Nigeria to produce in-house than for him to import that same good. The moment we are able to export much more than we are able to import, we could have the Naira appreciate further against the dollar at a very reasonable rate. But we believe that if CBN is able to clear the backlogs and address the demands of the supply, reasonable supply, valid supply, not those that are not using it for the right purposes, we believe there will be stability in the FX rate. So you as an investor, as a foreign investor, you know that the FX is very stable. Now, if the FX is very stable, that means you can bring in your money and you're sure that you are going to take back your money at this particular rate. So for example, if the Naira continue to depreciate against dollar and you've brought in your investment, you brought in like about $10,000, you've converted to Naira at 300. When you want to take back that $10,000, probably you just earn a 15% return on it. Let's say you earn like about 10,150. No, sorry. A 15% return is 11,500. So 11,500, you now want to go and convert it to dollar at 1,500 or 1,600. That's going to be discouraging. But if you are able to have a stable rate of conversion of the Naira to the dollar, we are able to allow foreign investors bring in money and to develop, because Nigeria cannot, not just the government will be able to boost the country. For Nigeria to develop, especially the manufacturing sectors, we need both government participation and private participation, more like a private-public partnership. We also need the private sector to be able to do the right things within the market and ensure that there's a lot of production within the market. But government needs to create the right environment by ensuring that money is there is monetary stability and there is the right asset, there's the right business environment. There's an improvement on the ease of doing business, and government really need to cut their spending and invest more in infrastructure so that we are able to enjoy this over the long term. But if the right fiscal policies are not being introduced, we might have to go back to a worse off situation than we are now that the CBN is trying to tamper.
Okay, I understand you right there. Yes, thank you very much for saying that, Mr. Oladetan. Yes, you actually mentioned all these factors. So you actually believe that the introduction, the unification of the foreign exchange markets and the other reforms concerning the bureau de change will also help in stabilizing the Naira and when it's selling against foreign currencies like the dollar. But there was something you pointed out that as of December last year, when most states governments had received their FAAC allowance, that was when this dollar price started rising against the Naira. So, and you also said state governors were hiding their dollars in different funny areas. Well, we know we can't really prove these things, so we shouldn't really make speculation about things like that. And then, yes, I totally agree with you. Yes, improving our physical structure, that will also help to actually like improving our roads, reducing the cost of energy tariffs. You also said reduction in taxes too will also help. But just before we round up, actually, yes, the major changes, there were some certain changes that were brought about that the Central Bank of Nigeria governor also announced. If you could just watch this very short video clip when he was talking about the impacts of this in the society. Can we just watch the short video clip from the Central Bank of Nigeria governor discussing how this would also affect the common man on the streets?
On the application of foreign exchange revaluation gains, the committee identified non-monetary factors driving inflation, such as the persisting insecurity and infrastructural deficits, and noted the role of fiscal policy in addressing these shortfalls, while reiterating the commitment of monetary policy support. In this regard, the committee applauded fiscal policy initiatives towards reducing the cost of living for ordinary Nigerians, including the ongoing efforts to improve food supply and provide mass transit CNG buses to ease the cost of transportation, and the civil service reforms to improve the efficiency of government, amongst others.
Okay, so we heard what the Central Bank of Nigeria governor said in terms of the decisions reached from the MPC meeting, providing mass transit buses and also improving the production cost of food supply all over the country. Actually, these are the issues that most people have been complaining of, and these issues, with the decisions they have reached, we're able to address these issues. Yes, immediately address them, but we hope over a period of time we can get a more permanent solution. So just before I round up my discussion with Mr. Oladetan, I wanted to also talk about the stability of the banking system. Yes, the Monetary Policy Committee decided that banks should actually increase their system buffers, actually. So we actually noticed that over a period of time, yes, you mentioned bank interest rates at the beginning of this discussion. So stabilizing their monetary system buffers also helps to stabilize the banks. And we also know that borrowing is not going to be a very convenient thing for most people who are not really top people in society. Borrowing will not be so easy for an average person that wants to start his own business, but the capital market has provided funds for people who want to access funds for their businesses. But in terms of stabilizing the banking system, the recommendations that the MPC committee reached, which is increasing the system buffers, do you really think this will help stabilize our commercial banks in the long run? Yes, Mr. Oluwatosin.
Okay, so as regards the Monetary Policy Committee decision on the liquidity and the cash reserve ratio, is only providing a test for the strong banks, those that are really strong, to be able to see if they will survive. So if you look at, we're likely to see more banking consolidation if the capital base of banks are likely to increase. When we look at Nigerian banking industry compared to other banking industries of the world, Nigerian banking industry is quite strong. If you look at the Basel ratio, an average Nigerian bank is doing about 10 to 15%, when the minimum is about 9 to 10%. Nigeria is doing between 15 and 16%. So it's trying to increase the resilience of banking, and they're trying to ensure that the banking system is able to provide the right funds and the right support. So, but it's going to be a squeeze on the banks. The banks are not going to really find it very easy. We saw a lot of banks made huge profit last year. We're not likely to see that huge profit as much as last year. So these are more or less restrictive measures or monetary tightening measures that is trying to put stability within the naira. So the strong banks will survive, and those that are not able to stand the test of time will have to come together and see how they probably change the management, or they consolidate, or they have been taken over by the big banks. But I don't think it's going to be an issue for the Nigerian banking industry, considering the fact that they've been at times like this and they've been able to scale through. They just need to revise their business strategy and to see how they are able to play well and more or less earning from non-interest income like transactions rather than from risk assets like transactions, mobile transactions, e-channel transactions, rather than from risk assets, which is non-interest income, because interest income is more or less like the top line or the major income for banks. So I believe Nigerian banking system is still going to be solid and is going to be more stronger despite these tightening measures, or despite these very strong restrictive measures by the CBN to be able to stabilize monetary and price supply.
Thank you very much for that, Mr. Oluwatosin Oladetan. It was really great having your market insights this morning to discuss the decisions made by the Monetary Policy Committee and the press conference that was held by the CBN governor to share these decisions with the public. So you actually shared that, yes, we need to actually adjust ourselves to these new decisions. This increase in the interest rate, yes, we know it's going to be quite tough for us, but in the long term, things will actually improve. And also improvements on our fiscal policy, like the Central Bank of Nigeria governor also stressed, improving our roads, our infrastructure, and also reducing energy tariffs. Hopefully, if we can reduce tax too, this would also help to actually curb this situation, this inflation situation in the country. It was good of you to join us on Market Insight this morning. We look forward to having you as our guest on subsequent shows. So let's share the official market rates and the parallel market rates this morning, Wednesday, 28th February. So the official selling price for the Naira, the dollar is currently selling at 1,491 Naira. The Naira is actually buying a dollar at selling the dollar at 1,491 Naira at the official CBN rates for today. And the pound sterling, the Naira is selling the pound sterling at 1,907 Naira. And the euro, the Naira is selling the euro at 1,635 Naira. While in the parallel markets, our unofficial rates, the Naira is currently selling $1 is currently selling, the Naira is selling at 1,610 Naira in the parallel markets. And in the pound sterling is going for 1,950 Naira. And the euro is going for 1,740 Naira. So those are our selling rates for today in the CBN rates and the parallel market rates. So thank you for joining us this morning on Markets Insights, where we discuss the decisions made by the MPC committee and the press conference that was shared by the Central Bank of Nigeria governor to address these issues. And we believe that with an improvement in our fiscal rates and also our adjustments to these new interest rates, we can curb inflation in the economy. So that was our time for today's show on Market Insight. Thank you for being with me. I remain your host, Lovina Emma. Do stay tuned to our continuous programming on Souq News.